Hello, everyone. This is Professor Reynolds, and I thought I would go over, let me get to the right screen here. I thought I would do a quick summary of the chapter and just quickly go over all of the homework. Page here. All right, so what we're talking about really is management accounting, managerial accounting. Managerial accounting involves providing information for internal users. So it could be items like break even. How many units do we need to produce to break even? It could be, what are my manufacturing costs? How do I allocate manufacturing costs to a product? What is the process that I use? You can see variance analysis. So basically, I think that this should cost X amount and it cost Y. What's the difference? So this is going to be what we're going to be covering this semester. Again, managerial accounting, sometimes called management accounting, is the process of developing information and management tools to achieve an organization's objective. The management process is, of course, involves strategic planning. That's what kind of products are we going to make? What countries are we going to be in? What states are we going to be in? How are we going to position ourselves? Are we going to try to compete with Walmart, who sells everything at the lowest price? Or are we going to try to be a niche, something like Gibson guitars, where we're going to sell a high quality product? And then we measure things. And so, for instance, again, if we thought it was going to cost us $300 to make a guitar and it costs us $350, that's a big difference. Why? What caused that? And then we do control, which means we're going to adjust the process. Again, you can see here strategic planning, cost systems, overhead allocation, etc. Financial accounting deals mainly with GAAP accounting, generally accepted accounting principles. Deals with the SEC. It deals with the Financial Accounting Standards Board, so it's more of a structured type reporting. Whereas managerial accounting is more of an internal, hey, what do we need and what is the best way to determine what we want to find out? So there aren't hardcore structures involved with that. You have what's called verticals. They're sometimes referred to as business units. So they're the ones that are actually producing the product and they're the ones doing the work. And you have horizontals, which are support departments, such as accounting, human resources, information technology, legal, facilities, finance. Uh, Shows here that McAfee has two business units. They have consumer business unit and enterprise business unit. And you can see those there, which are the verticals. Everyone else is there to support the process. For instance, in airline industry, the vertical function would be the crew, the baggage handling, gate stuff, etc. The horizontal function would be the information systems, accounting, human resources, etc. Now, throughout the book, you have these quick checks where you can go ahead and um, figure out the answer and then see if you're correct. So I would certainly recommend that because that'll reinforce what you're learning. So we're going to be talking a lot about manufacturing operations. And what is a manufacturing operation? Well, basically, we take raw materials and we turn them into a product. You have three components. You have the materials, In this case, we're also talking about Gibson guitar. What materials does is part of a guitar? Well, you have the guitar bridge, you have strings, you have wood, right? And then you've got to take that wood and you've got to cut it to make it look like a guitar, and then you've got to put it together. And so these people are direct labor. This is direct materials. But you need a factory to support this. You have items coming in, you have wood coming in. So you've got to receive the wood, you've got to store the wood. So you have to have storage facilities. You've got to take the wood and deliver it to the direct labor so that they can work on it. So the people involved in that process are called overhead. You've got electricity for the factory. You've got gas. You've got insurance. In some cases, you may have an HR person focusing only on the manufacturing process. So that would be part of overhead. You've got direct and indirect costs. So direct cost is something you can track to that specific item. For instance, the wood, you can track to that guitar, these strings. The labor necessary to make that, you can track that. But you have other things like maybe glue or supplies or the lights for the whole building. So those are indirect costs. Those can't really be tracked to that specific item. A cost object can be anything to which costs are assigned and will vary depending upon the decision making needs of management. Okay. So direct cost, of course, would be materials because we can track that. We know that to make a guitar requires X amount of wood, X number of strings, a bridge, etc. And so the indirect costs are not easily tracked to that item. We want to try to get as close as possible, but we want to make it cost effective. It's not may not be worthwhile to track small items. You just would total them up and then divide by the number of units you produced and allocate the cost that way. So again, you have manufacturing costs, which is your material costs, your direct labor, and your factory overhead. And here's a description of each of these. Financial statements. Now, you should be able to look at an income statement and a balance sheet and determine what type of company it is. If you're a service company, you're not going to have inventory, you're not going to have cost of goods sold. What you're going to have would be supplies and supply expense and labor cost. For a manufacturer, you're going to have different types of inventory. You're going to have materials inventory, you're going to have work in process, and you're going to have finished goods. So the materials inventory is just that. It would be the wood. Now, once the wood is goes to the table where they're going to start assembling it, that would be considered work in process. And until that item is completely done, it will be work in process. Once it's completely done, it's going to be finished goods inventory. Now, again, here is the balance sheet for merchandiser. So if you looked at Walmart's income statement and balance sheet, here's what you'll see. But if you looked at, say, Ford or Tesla, you should be able to see this. Now, it might be in the notes. It might say, well, this is just the total inventory. You might have to go to the notes to find this figure, but you should be able to say, well, this is obviously manufacturing. And in the income statement, of course, for retail, you're going to have inventory available for sale, ending inventory, and cost of goods sold. Now, see how this statement is done. When you're talking about inventory, you start with what do I start with? What do I have on hand? I'm going to add what I bought, and that's going to be total available. And then I'm going to subtract cost of goods sold, and that's going to give me ending inventory if you do the perpetual type inventory system. Or you start with your beginning inventory, you add your purchases, and then you will subtract your ending inventory. And the difference has to be cost of goods sold. And so you see here, manufacturing, you'll have cost of goods manufactured. So I want to see something. Let me pull up my Excel file here. This is an example of a bike manufacturer. Now, there are several ways to allocate overhead, but in this case, we're going to do it by labor hours. At the beginning of the year, we're going to estimate the cost of our overhead, so our non-direct cost. And that cost is going to be totaled, and then we're going to go, well, how many direct labor hours do we expect to have? And so we're just going to divide that. And so for every direct labor hour we use, we're going to add $20 of overhead. And so at the beginning, we have the pedals. We're going to add the pedals. We're going to start with the frame and we're going to add the pedals. So we go to the first station. And before, we're going to look at this 262.50, and that was in raw materials inventory. Well, we're going to use that. So now we're going to move that into work in process inventory. And in the first stage, it's going to take 1 hour. Okay. So that's direct labor is 1 hour times the direct labor hour, add the benefits. So really 1 hour is going to cost us $25. So the bike comes in, the frame and the pedals, we put the frame on, or to put the pedals on the frame. So right now we've got $25 in labor. We've got $250 or $275 in parts. And because we used 1 hour of direct labor, we're going to attach to it $20 of overhead. So at the first stage, if we stop right now and it's the end of the month and we're going to do our work in process inventory, basically we would have $320 in work in process. Next stage, same thing. We now have 320. Okay, so we're going to add the gears. So we're going to pull $75 out of raw materials. We're going to add it to work in process. We're going to take us 3 hours of labor. All right, so 3 times 20, 31.25, because this labor is $25 an hour, 25% in benefits. So we're going to add $93.75 in direct labor cost. We're going to add $75 in direct material cost. We're going to add this to what we had before. And so now at the second stage, we have $548.75. We have 3 hours of direct labor. So we're going to attach $60 of overhead. And so we're going to continue to do this. So at this point, we may have several bikes in each one of these, but we should be able to determine the total cost because we know at what stage the bike is and what's been done. Now, when we get through with this, we're going to have $180 of direct labor. We're going to have $435 of direct materials. And because we had 6.5 hours of direct labor, we're going to attach $20 times 6.5 or $130 of overhead. Now, at the end of the year, we're going to have whittled that total overhead down to where it may be a negative number, which means we're going to have to lower our cost of goods sold, or we're going to have excess, which means we'll raise our cost of goods sold. We'll do an analysis to find out where we're off, and then we'll correct that. So this is basically how that part is done. So now let's get back. There's some things I missed here. So, because this is going to be applicable to some of the, or one of the, okay. Sorry for this. I just need to get to one particular, here it is. All right, so this is page number 20. And this is, again, the statement of cost of goods manufactured. So you begin with something in working process, okay? You're, wherever you are on that bike manufacturer. If you're in the first one, then you're looking at 375. And then through that period that you're measuring, you add whatever materials you've transferred over, or you have beginning materials inventory. You add whatever you purchase, so that's the cost that were available. And then you look at what is my beginning or what is my ending materials inventory. And whatever that difference is going to be the cost of direct materials used. You add the labor, you add the overhead, and you're going to get total manufacturing cost incurred in the period. All right, you add that to your work in process at the beginning, okay? And this is sort of all your purchases. This is the beginning. These are sort of your purchases. And so you're ending with total manufacturing cost. Then you find out what you have in the ending process inventory, and that would be the total cost of goods manufactured. You would then add that to your cost to your finished goods, and that would be the total cost of goods available for sale. And then you would subtract your ending inventory, just like you're doing here, and that would give you your cost of goods sold. So now let's go to the problems, okay? All right, let me go to assignments. All right, I timed out, so I need to go back to here and go to module 1. Go to problem set module 1. Enter. Start assignment now. All right, so we're going to go to the first one. This is just really classifying either period or product costs. And I didn't cover that. That's covered in the chapter, but basically period costs are costs that occur in that period that aren't related to the manufacturing process. And so those costs are expensed immediately. Product cost would be that direct labor, direct material, overhead that's assigned. That's product cost. That is not expensed until you actually sell the completed finished goods. So all of your direct labor, your manufacturing overhead, your materials, none of that is expense until you sell, and then it becomes cost of goods sold. So anything that's not manufacturing related would be a period cost. Let me give you an example. Let's say that you have a security guard at the manufacturing plant. And that's the only job that this person does. And they provide security for the plant. So that person's salary and benefits would be part of manufacturing overhead. Now, if you have a security guard at the corporate office isn't engaged in manufacturing. They're part of sales or part of administrative costs. And so that would be expensed immediately. So the guard at the manufacturing would be indirect overhead, manufacturing overhead. So that would get assigned to the product and an expense when the product is sold. Whereas the security guard at the corporate office, his costs get expensed anyway. So you're going to come here and annual picnic for plant employees and their families. Well, that's a manufacturing cost, but you can't tie it to a specific product. So we would say that that is overhead cost, and you would just click on that. And we'll give you a clue. Marketing would be considered sales. The next exercise is going to be a worksheet where you're just doing the income statement and you're also figuring out the ending inventory balances. This is just an income statement. Now you can open this spreadsheet, and then what you'll get would be something like this. Nope, that's not it. Okay. Um, let's eliminate that. That's not something you care about. So anyway, you can go to the spreadsheet and you can do the work there, or you can do it here. All right. So again, when we're talking about an income statement, obviously revenues would be the first thing. And so you would put in the revenue amount. Now, what this spreadsheet here will do, it allows you to use Excel. It'll have all of this, and you'll just be able to, let's go ahead and use an example here. I'm going to go and say, okay, this just has the Excel portion, but we're talking about sales revenue. Okay, and the next thing is going to be cost of goods sold. And then the gross profit will be the difference between those two. All right. And then we're going to have operating expenses, which would be selling, SG&A, and administrative costs. Okay, so total operating costs are this. And so net income is going to be the difference between gross profit and operating expenses. And then here we're just looking at materials. All right, so we didn't have anything. We have materials purchased. Okay, and then we used some of those materials in our manufacturing process. So we're going to have 66,640 in materials, and you keep on going that way. Okay. Again, you can do it separately and just fill in the blanks here. All right. Now you can also look at Show Me How, and Show Me How will really go by and do a step-by-step on how you complete these problems. So if you get stumped, go there and it will just basically tell you what to do. And you can either, if you have a split screen or two screens, you can have it over one side and then use this over on the other. And the last problem is just going to be figuring out inventory. So again, you're going to start with work in process March 1st, and you're going to do that number. But you can also, again, open the spreadsheet and just pull this, and you're going to look at beginning material inventory of work in process, and then you're going to add your purchases, etc. But if you get stumped on this, either go to Show Me How or go back to this page in the book, page 20, I believe, yes, and this will show you, here is the statement. I hope that helps. Good luck with the first assignment.